Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight all the buzzing stocks of the day. And this morning, Monday morning, in fact, things are buzzing around. The bulls are feeling they're in control. The Nifty is up nearly around 65 points odd. And L&T is playing a great innings, actually, in cricketing parlance. That stock, in fact, is up nearly around 6%. That buyback news really has got that stock up and going. So you pull up a contribution chart, you'll see majority of these gains. In fact, we're up close to around 60 points. So let's pull up a contribution chart. Remember, L&T has nearly around 3.5% in terms of weightage on the index. And single-handedly, L&T is accounting for more than 30% of the gains that we're seeing in today's trading session. Infosys is dragging on the back of another resignation. In terms of their management. So not too good news for Infosys, but great news for L&T.
Great news for L&T, and you spoke about the 3.5% weight on the index. Let's talk about the bigger ones as well. Reliance, HDFC twins, after underperforming, have come back in the business and currently up about almost close to around 40 points single-handedly given by all these three companies. Interestingly, all the other crude-related plays, they're doing well. Last week, the crude fall perhaps was limited in terms of an impact primarily on account of the rupee weakness, but then the dollar index eased off, and right now you're taking a look at any of these stocks, the likes of Pidilite, that one's at the high point of the day. We have Asian Paints too, which is moving higher, and on Friday we saw Berger Paints move higher, and currently it's in the red, but it is seeing some bit of recovery from the low point of the day. The mid-cap index not looking too bad either.
That's right, Mangalam. And even take a look at something like a Raymond. The intraday chart should come up for you. Remember, that stock has moved into the F&O band. Right. From the lows of the day, we are seeing a bit of a bounce. Even in Friday's trading session, the stock recovered from the lows of the day. It's been a relative underperformer, but that stock is recovering as well as we speak. And even Jet Airways, I think we should pull up the intraday chart. Remember, the stock opening up down. That, in fact, has recovered as well a tad bit. But the sector that's done very, very well, Mangalam, in the last few days, last 10 sessions odd, has been pharma.
That's right.
And you have a lot of pharma winners. Just take a look at Cadila Health. I think we should get that stock up for you. It was already holding with a gain of nearly around 3%. Now the stock is up nearly around 6%. So Cadila comes up for you on the screen. That stock is up 6.5%. Plenty of winners.
Plenty of winners. So let's talk about all of those winners. First up, this headline. This morning, we're watching the headlines at this hour. L&T, that one tops the Nifty charts. Board to mull buyback on August 23rd. Macquarie says that buyback could be anywhere between worth $0.7 to $1 billion. Believe this move will drive short-term price action.
And Infosys falls in trade after yet another big management exit. CFO Mr. Ranganathan resigns citing personal reasons, but he'll continue in his current position till November 16th.
Titan, that one trades weak in an otherwise strong market. The management tells CNBC-TV18 they're seeing some sluggishness in demand, especially in the southern states that are hit badly due to the monsoons. He adds that the jewelry segment revenue guidance of 25% is under observation, but he's sure they can do at least 20%.
And floods in Kerala impact south-based lenders like Muthoot Finance and Federal Bank. Muthoot tells CNBC-TV18 that 3 branches have been affected by the Kerala floods, but adds that they are fully secured with gold and don't see impact when it comes to NPAs. Okay, all right. The Nifty is holding with good gains. We're up 65 points odd. Now we're trading comfortably above that 11,500 mark odd. So good going in terms of the Nifty. I just want to pull up. Let's pull up some of these options that are active today. It's we noticed in Friday's trading session itself the 11,500 put. That was seeing some addition, while the 11,500 call was seeing some unwinding of positions. Today as well, you pull up the 11,500 put. Now that's added close to around 11 lakh shares, telling you that now the bulls, they feel that they are in control. They believe that they can go ahead, defend the 11,400, 11,450 odd mark. And that's where we're seeing massive addition there. Just a couple of sessions ago, the premium on the 11,500 put was nearly around 120 rupees. Now that's come down to around 60 rupees odd. So those writers, they're already making good money as we speak. How do you trade the Nifty from here, though? Ashwini Gujral's with us. Hi, Ashwini. Good morning. Trade on the Nifty. If you're long on the index, where does the stop loss come in at?
See, basically now, as long as you are able to hold on to 11,500, I think you should remain long. On the Bank Nifty, basically, 28,150 should be your trailing stop. The market looks strong because the early morning Infosys decline got absorbed. So I would think that we could have consolidation for a lot of today because the large moves happened. But possibly, in the second half, 130 onwards, there may be, fresh buying which comes in. Having said that, L&T Finance is a buy with a stop of 184, target of 196. Reliance is a buy with a stop of 1200, target of 1265. And Glenmark is a buy with a stop of 610, target of 645. Today, HDFC Bank have come back after many days. So Bank Nifty seems to be having fairly strong legs for the day, given that Yes Bank is also higher.
All right, Ashwini, thanks a lot for that. We will keep coming back to you all through the course of the remaining course of today's trading session. Interesting. Nigel, you spoke about the 11,500 put. We've been talking about how 11,500 call had the maximum open interest. But if our director can quickly pull up the 11,500 call, that one saw some unwinding on Friday's trading session, continues to see some unwinding as we speak. And just as we speak, the 11,600 call has the maximum open interest. So the maximum open interest on 11,600 has become the case for this month so far. So 35.4 lakh and 38.6 lakhs. So 11,600 has taken the forefront.
Mangalam, I would be interested to pull up the Nifty futures plate as well. Remember just a few trading sessions ago, you were telling us that the premium on the Nifty was 29 points approximately. In the last few days, the premium has gradually been coming lower. So we'll keep an eye on that mark as well. It's coming at around 11. It's come down to around 11 points odd. But remember, the FIIs, though they're net long on the index, in the last few trading sessions, they've added a lot of short positions. I think in the last 6 sessions, they've added nearly around 32,000 contracts on the short side as well. So just keep that in mind. That may not be such a bad thing because they're buying calls as well. And remember, if you have shorts in the system and if this market, takes off maybe around 30, 40 points odd, some of those shorts they'll have to cover. And then, in fact, we have additional legs as well, and maybe moving towards 12,000.
All right, we will watch out for that mark, but 12,000 will be a little too early to say right now. Lest people start, accusing us of putting some levels and scaring people and maybe, causing a superstition or something.
Absolutely.
All right, so let's talk about that in a bit. But right now, remember, it's been almost 2 weeks of incessant downpour, resulting in flooding in Kerala. We spoke with S. Subramaniam, the CFO of Titan, who says that demand in southern states have taken a hit on account of that. Not just that, there is overall sluggishness in the demand that has taken the stock lower in an otherwise strong market. So let's listen to what the management had to say to us this morning.
Generally, softening of gold prices is good for business. Having said that, I think the industry is still not as buoyant as it used to be in the past. We've talked about that for the last 6 months or so. So to that extent, there is some softening of the demand. But hopefully the softening of gold prices should help. The southern states generally have been hit quite badly. At least Karnataka and Kerala have been hit very badly due to the rains. So one is hoping that things settle down there fast and it picks up.
ONGC, that stock is on our radar. A big move on that stock at the high point of the day, sitting with a gain of almost 4%. And that's on account of the flashes that came on the screen. CNBC-TV18 exclusive sources say that the government is proposing an IPO for ONGC Videsh. Sapna Das joins in with those exclusive details. Sapna, the street is taking note of that. The stock up around 4% as we speak. What are you gathering?
Nigel, so basically the view from the finance ministry is pretty much clear in terms of, getting more and more CPSEs listed. And, let me share with you that the focus is absolutely on the energy sector as of now. So keeping all of that in mind and basically trying to add value to the parent company ONGC, OVL IPO is being pushed for by the finance ministry. Now, of course, this will have to be done in absolute consultation and kind of consensus with the administrative ministry, which is petroleum. So we are given to understand that the first level of communication has been sent, and we just have to see how it goes forward. I cannot, or rather government cannot give us a timeline as of now in terms of, whether it will be in the current financial year and, stuff like that. If you can recall, Nigel, around 4 years ago, this issue had come up, but since so many years, there has been a complete silence. So that is first aspect. Second, of course, we are also given to understand, by SEBI regulations, it's always a 10% IPO. But probably, some quarters in the finance ministry are of the view that, we should have larger chunks in terms of IPOs. When you, put out your big companies, and there's a lot of value that they're looking at in terms of OVL IPO. So we just have to wait and watch and see how this really progresses.
Okay, all right, Sapna, thanks so much for joining in and giving us those details. The stock, by the way, has moved to the high point of the day as we speak. But let's move on with the show then, and let's get the first management that's on our radar. Up for you, we have Mr. Shuja Mirza, the president of Mirza International, who joins us on the phone line. Hi, Mr. Mirza. Thanks so much for joining in. Well, the strategy seems to be quite interesting. You all were talking about increasing your branded segment revenue. Now, that's precisely what's happened, both on Red Tape as well as on Bond Street. So there's been a good growth out there, but it's coming at the cost of margins. So a two-part question. One, what is the branded sales likely to be this year? Last year, it was around 450 crores. And importantly, what's the most sustainable margins?
So there are two things regarding, as far as margins are concerned, I think the margins will be similar to export in a slightly longer term. Right now we are at an expansion spree, and when we're expanding, certain things happen and the margins could be reduced a little bit. But if you still look at our margins, they're very similar to what we were getting in exports.
Okay.
As far as the number is concerned for this year, we are targeting anywhere between 600 to 650 crores for a domestic business.
That's the domestic branded business you're talking about,
That's the domestic branded business, yeah.
It's interesting because as you were speaking, there were a couple of graphic plates that came by. In the footwear space, your stock has been an underperformer. The last 1 year, it has lost about 36%, and that's primarily on account of weakness in revenues. Because if you take a look at the first quarter revenues, those graphics should be on the screen. 3.9% revenue growth, that compares with 17, 8% that your competitors are doing as well. So just a question on the strategy itself. Is this strategy of chasing brands at perhaps the cost of margins the right one? Because you are also lowering your non-branded exports. Are you sure of this strategy?
So, Nigel, if you look at these competitors of mine, which is Liberty, Relaxo, and Bata, all of them are working in domestic market. They're not doing any exports. If you look at my domestic growth, if you just look at the domestic business on its own, this quarter we grew on its own. This quarter we grew by 27%, which is similar to what these guys are doing. Unfortunately, this is a very bad time for export. And for the last 1.5 to 2 years, because of the slowdown in Europe, exports have been taking a hit. Looking at the market today, we feel that the exports are going to grow, and I think it's going to start growing in the next 3 to 4 months. But this is at the company level. And if you recall, 2 years back, our domestic branded business was only 10% of our revenue. So now it's a much bigger share, and our Indian business is the one which is actually growing the company overall. Otherwise, there would be a degrowth.
True. So you're talking about 600 crores in terms of revenue from your branded business. So that's quite a tall ask as well. A quick question in terms of exports. We've seen some weakness in the rupee. Is that beneficial to you?
It really doesn't make much of a difference at this point because we cover a lot of our orders.
Okay.
We take a forward cover.
All right.
So that way we are pretty risk-free in terms of any fluctuations in currency.
Okay.
All right. If you could break up the exports for us, Mr. Mirza. Earlier you said that, you're looking at 50% of your exports coming in from the branded side of the business. What does it stand at right now, and what's your target by the end of this year? And is there a margin differential between branded and unbranded exports?
So if you look at the export right now, which is, first of all, there's no margin difference between exports and domestic business, because we work on the cost-plus basis. And if you want to know how much is our export overall.
Oh, and break that into branded and
branded
made to order.
Export for SY 17-18 was 10% of the total export. That was 51 crores out of 500 crores.
All right. And this year you plan to increase that? Yeah,
it should grow, but it should grow by about 10 to 15% maybe.
Okay, all right. Let's get a couple of more details going. Online sales. Just a couple of days ago, I think on Independence Day, there was so many offers that we were looking at. Red Tape, the offers were glaring at the screen. What's the percentage of sales coming in from online? If you could help us out with that number.
Gee, that's too recent. And that is something that we are still... we can't really share those numbers right now.
Okay,
it just happened 2 weeks.
But is it I'm not asking you about what happened 2 weeks ago, but otherwise, on the whole, as a percentage of revenues, how much comes in from online? Are you looking to grow that?
Yes, we're trying to grow our online business, and I think about 35 to 40% of our revenue should come from online business.
35 to 40%? From what? Currently, what is it?
Currently, it should be around, I think, 20-ish.
Okay.
20%.
So you wanted to, that's interesting. We will talk about that point in a bit, but you know, you were talking about those offers. I was just looking at one of the websites which is offering red tape sneakers at a 70% discount. So if you're saying that increase in contribution from online will be more than double what it was last year, does that impact your margins?
No. So a lot of these offers are given by the marketplaces.
Okay.
If Amazon or anybody else or any of our portals are giving discounts from their pocket, it really doesn't affect our margins. Okay. And another point which I want to make to you, that our stores, we have online shops which are part of omni-channels. So what we're doing is that anything that you order online, let's say if I have a store in Amritsar, we can deliver from there directly. So that's also contributing to my online store, online sales.
How's the footwear for women doing? How much does that contribute to your revenues right now? And what about the sports brand that you were likely to launch? Has that launched? How much does that contribute to your revenues?
So the sports brand currently should be around 15 to 20% of our revenue, and the ladies' footwear is just too recent. It just started this quarter, so give it another quarter, we share revenues with you.
All right, Suja, we have to ask you a couple of final questions before we let you go. Sure. Promoter holding has come down, right, to around 70%, 70.4% from around 73%. Some promoter has sold. First part. Second part, what is the debt in your books? I'm seeing your finance cost for the first quarter is up marginally. So if you could give us a sense of what's the debt in the books.
I won't have the detail right now with me, but we can get back to you on that.
Okay, but what about the promoter selling? Has the promoter sold? Because the promoter holding has come down from 73.5 to 70.4%. Do you have any clarity on that? Which promoter has sold? Why did they sell? Will they sell more?
No, I don't have clarity on that, but I can get back to you on that.
Okay, we'll be awaiting some clarity on that front.
All right, we will be awaiting some clarity. Thanks a lot, Shuza, for joining in and giving us all those details. Interesting. If the outlook is so good, the promoters' stake has come down. Are the promoters themselves looking to back this stock, given it's trading at what, one-time sales as compared to the others? So let's see whether this comes by or not. As of now, the big point that he said that they will see about 600 crore revenue from branded exports this year, or branded business this year. And the online sales, that is likely to jump up to double to what it is right now.
Well, India's largest health insurance company in terms of profits and premiums, Star Health, is being acquired for $1 billion by Rakesh Jhunjhunwala and a consortium led by Westbridge Capital. Yash is here with all those details. Yash, over to you.
Well, after an 18-month-long bidding process, it's finally a done deal for Star Health Insurance. A consortium of Rakesh Jhunjhunwala along with Westbridge Capital have been selected as the final buyers for Star Health Insurance, and sources tell CNBC-TV18 that it was a race between ICICI Lombard General Insurance and the consortium led by Rakesh Jhunjhunwala. ICICI Lombard General Insurance had submitted a bid amount of about 5,800 crore, whereas the consortium led by Rakesh Jhunjhunwala had submitted a bid amount of approximately 6,500 crore. Hence, the valuation aspect of the deal going in favor of Rakesh Jhunjhunwala and Westbridge Capital. But do remember that it wasn't just the valuation aspect of it. The current management of Star Health Insurance, led by promoter founder V. Jagannathan, also somewhere wanted to retain the management and the operational control over the company, which is Star Health Insurance, and that could have only been possible if a private equity player or an investor really gets in the company and not a general insurance company. So yes, the management control aspect of it also went in favor of the consortium led by Rakesh Jhunjhunwala. So yes, the final outcome of the deal is really in favor of Rakesh Jhunjhunwala and Westbridge Capital. But we also have with us Nisha Poddar, who's also been tracking that story from the very first point, and she joins us with the finer details of this transaction. So Nisha, what could the new structure post this particular transaction for Star Health Insurance look like?
It's a large investment and a large deal of the largest healthcare company in the private space. So Star Health being bought over by Safe Crop Holdings, which is a consortium formed by Rakesh Jhunjhunwala, Westbridge and a clutch of other investors. 6,500 crore rupees is the total deal size. Before coming to the contours, the biggest significance of this transaction is that Rakesh Jhunjhunwala, the ace investor, will be holding 35% stake in Star Health and in capacity as a promoter. So an investor really putting the skin in the game is going to be holding huge significance when it comes to this transaction. Talking about the contours, 51% with Westbridge, which is investing through an alternative investment fund, which is India-based, so AIF format, in line with the regulations. Madison Capital, 10% stake, and other 4% will be held by Rakesh Jhunjhunwala's associates. They've also kept in mind another regulation that more than 10% stake in the company can be held only through an SPV, and therefore Safe Crop Holdings has been formed by this consortium of investors. In terms of deal valuations, it's going to set a benchmark because very few deals have really fructified in this space. So in terms of price to book, it's 6.8 times, and price to earnings is 38 times. So all that needs to be kept in mind. It's a profitable company and a very large transaction fructifying in the insurance space.